Today, Binance fails to register in the Netherlands and decides to wind down operations. BlackRock files with the SEC to launch a spot Bitcoin ETF. And we talked to an associate professor at Santa Clara University's business school about what that potential fund would mean for crypto investors if it can get approved. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies reversing course and are on the rise as we head into the three-day weekend. Bitcoin inched closer to the $26,000 level by noon Eastern. Ether moved closer to the $1,700 mark, and Solana rose more than 3.5% over the past 24 hours. In the past week, though, Bitcoin's price has taken a hit, down 3.75%. Meanwhile, Ether has fallen a whopping 9.8%. Okay, let's talk about the top stories. First, a couple updates on Binance out of Europe. The exchange is pulling out of the Netherlands. It announced this morning that it would be winding down operations in the region after failing to register with the country's regulator. Binance stopped registering new users immediately and will only allow withdrawals starting July 17th. Even in the announcement, the company emphasized its commitment to Europe's markets in crypto assets regulation, also known as MiCA. At the same time, though, French news outlet Le Monde reports that Paris prosecutors have been investigating Binance for the unauthorized practice of acting as a virtual assets service provider, as well as money laundering. In a statement to Le Monde, Binance said on-site visits by regulators are part of regulatory obligations and that all customer information is held securely. Next, BlackRock is wading into the battle to launch a spot Bitcoin ETF. The asset management giant filed a proposal with the SEC to launch the iShares Bitcoin Trust, and if approved, BlackRock says it would allow investors to make an investment in Bitcoin without buying, holding, or trading Bitcoin directly. Now, there are other kinds of Bitcoin ETFs, like Bitcoin Futures ETFs, which let you invest in the cryptocurrency's futures contracts. But the SEC has so far refused to let a spot-based ETF, which lets you trade on the cryptocurrency's price, move forward. The reason the agency has repeatedly given for 10 years, it could create a heightened risk of market manipulation. For our main story, I spoke with Gustavo Schwenkler, an associate professor of finance at the Leavey School of Business at Santa Clara University. We talked about what this potential ETF means for Wall Street and crypto investors. What do you make of the timing of this filing by BlackRock for a spot Bitcoin ETF? And why do you think that BlackRock would push ahead with this with Coinbase as its custody partner, given the legal and regulatory mess that Coinbase is in with the SEC right now?
Absolutely, yeah. Well, I think there's definitely there were trade-offs on the table that BlackRock kind of waited out. And I think there's probably been a lot of work that has gone into this application, and they were probably thinking, like, do we move this ahead or not? And the decision was made to move ahead because the benefits probably outweighed the costs. I think there are definitely strategic moves in submitting this application now at this point, especially given what's happening. I think for Coinbase, this is a really good opportunity to showcase that one of the biggest asset managers is supporting them and is basically looking at Bitcoin more like a commodity and filing this ETF. So I think that really validates kind of the point that Coinbase is making about kind of assets that they offer for trading. And I think for BlackRock as well, it's probably a good time right now in spite of the mess, because it really pushes them to be kind of the leader in terms of like bringing kind of more mainstream tools to crypto at a time when there's questions about whether there's a usage for this and whether it will survive given the regulatory environment. So I think BlackRock was also thinking that that Bitcoin is here to stay, crypto is here to stay. We want to be kind of the leaders in legitimizing kind of this market, and probably that was one of the thoughts that went into filing this now as well.
What are some of the main arguments that BlackRock is making in this filing, and how are they different from arguments that have been made in previous filings for the spot Bitcoin ETF that we have yet to see be approved in the US?
Yes. So I think one of the main arguments that BlackRock is making now is that there has been a lot more adoption of crypto over the last few years since the last time this was considered. We've seen lots of inflows from retail investors into crypto. Even throughout this period of instability, we've seen retail investor demand for crypto be very, very strong. We've also seen some institutional investors move into crypto in spite of the situation. I think the institutional demand has been a little bit slower, but it's still there. Crypto investing is hot still in some institutional markets. So I think the main argument that they're making is that there's very strong demand now, and if you look at prices, basically it would suggest that the situation currently in the market is not as scary for some investors as kind of some people might think. So I think that's one big argument. I think a different argument as well is that right now, given the push for regulation coming from the SEC in the US, and given kind of what other countries have done in terms of regulation, if you look at kind of Europe and if you look at Canada and how they've approved other spot ETFs as well, I think there's kind of a push to move the regulator as well to really consider this market and how they want to position themselves in terms of allowing ETFs and broad accessibility to crypto markets. I think one of the main issues that BlackRock will probably face is that it's still not quite clear how sound and robust these markets are, especially on the spot side. And I think that's going to be the strongest argument to make. If you look at kind of past applications, the rejections have always been based around like there's no proper kind of risk management at the exchange level, potentially in terms of kind of like scams and bad actors and market manipulation. But I think now that the SEC has taken such a serious stand, especially with Coinbase, around these kind of issues, I think BlackRock is really trying to position themselves and really ask for answers in this regard.
This has been a discussion for such a long time, but just as a reminder for viewers, can you talk about how a spot Bitcoin ETF would benefit investors compared to the benefits of, say, the existing Bitcoin futures ETFs that we do already have in the US?
So I think the main difference between these two from the regulation point of view is that Bitcoin futures are more regulated, right? They trade on regulated platforms. So there's kind of a better framework to controlling and managing risks in those markets. Now, for BlackRock, the main argument to make is that Bitcoin futures are still kind of a niche market. It's not a very broadly adopted market in crypto because it's an institutional market. So the kind of investors that trade Bitcoin futures and the way price would react in the Bitcoin futures market are potentially different than what you would get in the spot market. So I think one of the main arguments that BlackRock is trying to make is that allowing broad masses of investors to gain exposure to the spot market allows them really to participate in the proper risk reward trade-off in this market versus kind of what happens in the futures market where it's a very segmented market. So I think that's the main benefit of bringing a Bitcoin spot ETF to the market, is that it's a broader, it just captures the broad risk reward benefit of the market better.
Okay, so what happens next? Because we know that these applications don't just get filed and then approved weeks later. So what can we expect to be looking for over the next few months, let's say?
Yeah, I think this is definitely a very strategic move, both from Coinbase and BlackRock. I think what we're going to be experiencing is we're going to get a lot of answers from the regulators in the US as to like, how are we thinking about crypto? What is Bitcoin? Is it a commodity in the end? Can we really think of this ETF as a commodity ETF? We're going to get a lot of answers. I think this is part of a move to push the regulator in the US to provide answers as to how crypto will be regulated going forward and whether we'll have different kind of rules for this versus what already exists. So I think it's definitely going to be a long process, but I think we're going to start getting a lot of answers as to like how crypto will be regulated going forward.
Do you have an inkling about a potential outcome one way or the other? And I do want to add, it's been 10 years now since the first application for a spot Bitcoin ETF was filed, and that was from Gemini's Cameron and Tyler Winklevoss. And, you have talked about how much more evolved the regulatory landscape is compared to how it actually feels. But with all the hostility coming from the U.S. regulators this year, it does feel further away than ever. But are you optimistic?
I think this is kind of like almost like a high risk, high reward bet for BlackRock. I think my baseline assumption is that this probably is going to get rejected as well. I think my more optimistic assessment is that if this actually gets approved and it works out really well, that the markets are functioning in some sort of efficient way, and we see broader investments going into crypto from both institutional and retail investors, that would be kind of the best case scenario. And that's, I think, what also blockchain is betting on, that that's how it could work out. But I think it's less likely that that's actually how it's going to work out. I think the worst case scenario would be a scenario where basically this gets approved and the markets break down, or there's contagion from crypto to traditional financial markets, which is the main concern of the regulator in this regard. I mean, that's kind of the risk, right, that BlackRock is taking on.
Okay, before we go, we're wrapping up our coverage of Vision 2023 in Austin, Texas. While I was at the crypto investing conference for financial advisors, I spoke with Jeffrey Park, a portfolio manager with Bitwise Asset Management. He compared the ongoing crypto crackdown in the US to the regulatory advancements overseas. Take a listen.
When you see those activities happening, you have to take a step back and appreciate the general trend outside the scope of what we live here as Americans witnessing day to day. And so while it is a bit of a short-term hindrance to the broader dialogue we're able to have, as it can serve as a distraction towards the bigger picture, I think we have to remember crypto is a global asset class, has a global audience. So it doesn't stop and end with just the perspective of one regulatory agency here in the United States.
You can find that full interview over at cnbc.com/Crypto World. That's all for Crypto World this week, but we'll be back again on Tuesday after the long weekend. We'll see you then.